This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Risk returns a rebound in Chinese shares, pushes global stocks higher as unrest over COVID curbs eases amid a heavy police presence. Tightening tilt while the Fed officials stress the need for more hikes to break scorching inflation, even if at a slower pace. Plus, Musk rounds on Apple. The billionaire owner of Twitter attacks the iPhone maker in a flurry of tweets, risking ties with a top advertiser. Now, first things first, we do have some interesting stories we need to get to, but this is what the picture looks like for the markets. Getting 0.2% for European stocks. Look, there's a very clear move into risky assets after some of the concerns that we had over China and some of the protests yesterday. And the contribution, of course, of China to the world economy abated somewhat. China said it would bolster also vaccination amongst its senior citizens. And then we had some pretty encouraging figures in terms of CPI in Spain, and that's changing what we look at in terms of bond markets. We'll get to yields overall in Europe shortly. Crude oil, 79.02. This WTI, I could also be looking at Brent, and then S&P 500 futures gaining 0.5%. Now, the European map, if you look at some of the affinities or not with the energy crisis and the proximity to Russia, you can see the UK gaining 0.7%. We have a really interesting story on the Bloomberg terminal about house prices, certainly that prime house prices, according to an index by Knight Frank, will go down 3% in the UK, Dubai taking that top spot. And then you can see the DAX and the FTSE MIB over in Italy pretty much unchanged. Now, Bloomberg's Chief Asia Economics Correspondent Enda Kern joins us, and all of the news related to China and what we've seen over the last couple of days. Enda, thank you so much for joining us. How should we look at China? How should we look at the contribution China going forward will do to the world economy?
Well, we had news today, Francine, that the government is going to target the elderly population in particular for vaccination. It's going to push vaccines among this part of the population, especially in nursing homes. They will use data to identify who does need a vaccine or a booster shot, because that part of the population, those aged 80 and above, are among the under-vaccinated in China's population. Now, the government today stopped short, however, of enforcing mandates or providing specific details of how they're going to do this. But the point of it all is, analysts are saying this shows you that China is now on a long road out of COVID zero. Eventually, they are preparing to make that journey. That's why we saw markets respond the way they did today. A big rally in individual shares linked to vaccines, for example, and of course a broader rally that the economy might start to pick up. So it was obviously, of course, the backdrop being those protests in recent days that would have certainly not have gone unnoticed by the government, met with a fairly stiff police response. But the net takeaway, I think, for most people watching the China story today is that it's a small incremental step on what's going to be probably a long and maybe complicated journey for China to transition away from its COVID zero policies and back towards reopening and connecting its economy with the world.
So, and how difficult is it to actually game theory what happens in China? We know that they're using police sensors and and other tactics to avoid some of the protests. Do you assume that protests will slowly peter out?
Well, politically speaking, we know there's always going to be a very tough response to protests in China. What our colleagues are reporting on over the past few days is quite unprecedented, Francine, and it was met with that stiff police response. There are other factors at play as well. Our colleagues were saying, for example, the sub-zero, freezing cold temperatures in Beijing probably played a role in all of that. We'll need to see how the protests play out over coming days and the weekend in particular. But the bigger point is that there are some signs now that the government is trying to tweak its COVID zero strategy, at least move away from some of the rolling cycle of lockdowns and restrictions, try and let the economy get back on its feet, and of course to let people get around and improve mobility. That seems to be the takeaway from the steps in recent days.
All right, let's also bring Janet Moy of Brewin Dolphin, head of market analysis there, RBC Brewin Dolphin. Janet, when you look at China, and you're of course also a China expert, and you've given us insight over the last 10 years, is this a pivot point for the Chinese economy on how many vaccinations they'll do for the older members of the public and what it means for the world economy?
Hi, Francine. Good morning. Thanks for having me. Yeah, we think this is quite a pivotal moment because we haven't really seen this kind of broadcasted widespread protests in China. So I think the people have spoken. it's been too long, and I think the officials, I think they got the message, and that's why we got the press conference today, a bit of softening in the tone. So I think the overall direction is still, gradually easing that very strict COVID-0 strategy. So it is a good thing, but it is going to be done in, a two step forward, one step back kind of process. It's never going to be easy, and the market will be very, very sensitive to the developments. But overall, I think it's a positive trend.
So, Janet, overall, what does it mean for China's contribution to the world economy? Are you also expecting less lockdowns going forward, or how does that develop?
Yeah, I think if the current situation stands, we do expect that the lockdowns will be more infrequent because there is a macro and the top-down guidance of gradually easing policies, and I think the regional officials also get that. So we expect more easing measures, more activity going forward from the consumer side of things. Services side has been absolutely hampered by the zero COVID strategy, so it would be very positive domestically. And from a global perspective, there has been a lot of concerns on the ongoing disruption to global supply chains. I think that would alleviate that concern, and that would help to further dampen that global goods inflation story.
And so, Jan, overall, does it directly impact, energy in the immediate term? So is it oil and energy prices, or is it just the supply chains that we need to look at?
Yeah, I think, so we have seen oil prices slumping basically in the past months or so. And I think a big part of that is due to China still not reopening. But I think if there is more concrete evidence that China is going back to its normal, it will be very positive for the commodity sector, especially energy and also gas. We've both seen prices slumping quite a lot. So it will be short-term positive, but longer-term factors, of course, that still depends on the Russian side of things, the OPEC supply side of things. But yeah, it will be positive for the oil and gas.
So, Jan, overall, are we reaching peak inflation? I know there's you can see peak inflation, but core inflation being very, very sticky. And is this the point where finally the market realizes what Fed officials have been trying to say, that maybe they'll ease off, but the trend is definitely higher interest rates?
Yeah, we do think that we are seeing peak inflation. We are seeing that in the US in terms of the headline. The core is still very sticky, but eventually that would also turn because of the slowing housing market. First of all, that will have a more significant impact on demand, general demand next year. We're not seeing that yet, but next year probably more noticeably. And we think there are many leading indicators that tell us inflation is peaking. You see basically producer prices slowing across the world, food prices slowing, all the commodity complex slowing from the peak. The strong dollar is very supportive for the imported goods side of things, and eventually we're going to see a slower labor market. So I think all that points to some sort of slowing inflation in next year.
And I know you've written some wonderful analysis, of course, on central banks and some of the challenges going ahead, looking into 2023. What kind of juncture do you think? I don't know whether we're at crossroads, because there's a belief in the markets that actually inflation will come down, and that's not exactly the message we're hearing from central banks.
No, I think that's the biggest question, Francine, for next year. There is a view that we've passed peak inflation, certainly maybe in food prices and in certain commodity prices. Obviously, the European energy crisis is a standout from that, though. But the big question is less about has inflation peaked, where does inflation come back to? Does it plateau at a high level, or does it come back to somewhere that the central banks are comfortable with, somewhere near those mandate targets that you all have to observe? That's probably one of the biggest questions, and that by extension will dictate where, of course, interest rates go and where people's mortgages will go next year. And that, of course, will dictate a lot of, the whole consumer animal spirit story and the pressure in the housing market that we've seen across the developed world, especially this year. So I think there is a lot of focus on, I think, less about the peak inflation story, but where does it come back to? Does it settle at a high level or come back down to where central banks wanted? That's the big unknown for next year.
Yeah, and Jan, if you look at that big unknown, of course, how do you play that on the markets? You just go into bonds.
Yeah, so in terms of equities versus bond, we think that bonds are more attractive than equities at the moment, because I think markets are pricing in a lot of interest rate increases already. Basically, we're not, the bulk of that interest rate increases has happened, and we're not far from the peak, basically. You can speculate whether it's, in the US it's 5 or 5.25%, but we're nearly there. So we think that bonds overvalue, especially, the yield curve is flashing these recession signals, and it's our base case that there is going to be a recession sometime next year in the U.S. So bonds would be a asset class that perform in that sort of environment. And equities, where we don't have a strong conviction yet, because we think that the earnings downgrade and the recession next year is going to potentially hamper equities further.
All right, thank you so much. Janet Moy there, head of market analysis at RBC, Bruin Dolphin, and Bloomberg's chief Asia economics correspondent, Enda Kern. In terms of market moves, also watch out for European yields. That Spanish inflation number actually eased more than expected, and that will probably give a little boost for the ECB, reinforcing expectations for a wider slowdown in European prices and maybe offering some comfort to governments. Coming up, Twitter boss Elon Musk says Apple has cut back its advertising on the social network. So we'll have plenty more on that story next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, BlockFi has become the latest crypto casualty as it files for bankruptcy, citing FTX exposure, with the FT reporting it's suing the FTX founder, Sam Bankman-Fried. Now, joining us now is Ana Herrera, our senior crypto editor. Ana, I mean, first of all, it feels like every day, every week, maybe not every day, but every week, there's something going wrong with a part of someone that had exposure to a crypto market. So what's happening with BlockFi?
So BlockFi wasn't doing well already because they were exposed to the fall in prices, obviously, because they're a lender. They were bailed out by FTX, and we know that now FTX needed a bailout, and they've gone bankrupt. So obviously they're exposed to FTX, and that's sort of what drove them to their bankruptcy. And clearly, obviously, they're probably not the last, because they had their own counterparties, and we've not been able to see from sort of their filing who their major counterparties are. I think we saw the SEC creditors. We saw the SEC is one of their major creditors, which is funny, and I guess in a way, but still there might be more dominoes to fall when we figure out who the other counterparties and creditors might be. So
what's the market reaction? You're right, this is like an ecosystem, right? So it's lenders, they're all intertwined. How difficult is it to find out who's next?
Yeah, you'd think that it'd be easier because of blockchain, blockchain transparency, everything is there. But really, like, a lot of these exchanges and centralized institutions are sort of like black holes. You don't really see what's going on. So it's hard until, you actually see the creditors list to figure out who was exposed, or if they come out and say, some firms have said we were exposed. But obviously, like, it tends to be the ones where maybe the exposure isn't completely too big, or where they want to minimize contagion. We don't know really if keeping the names not open is actually helpful or not, because in a way it might slow down. People might be thinking, who do I trust now? And so that might be stalling things. So
are you expecting more pain until? And I don't know how long that pain lasts until we find out who the last domino is.
Yeah, we don't really know. This has really started earlier on this year, so it's actually continuing since May. We had a bit of a lull in pain, but it's back now. We were watching Genesis last week. They were raising money, and they said if we don't raise money, we might file. So obviously we're trying to figure out and trying to wait and see if they've raised money or if they're going to file as well.
All right, Ana, thanks so much. Ana Herrera, they're our senior crypto editor. Now, from crypto to Twitter. Elon Musk has tweeted that Apple has mostly stopped advertising on Twitter. A few minutes later, the Twitter chief claimed Apple might boot Twitter from its App Store. Now, for more, we're joined by Bloomberg's Giles Turner. Giles, I mean, so much drama in the Twitter sphere. And what is this? Is this Elon Musk just baiting and picking fights?
I get a feeling that he's come into the office and realised that Apple gets a 30% commission for all the money that he can possibly make via the App Store, because the real problem is Twitter needs to make money, right? Yeah. He's bought this for a huge amount of money. It doesn't make a huge amount of profit, if any. He wants to charge $8 for every user to use Twitter, and Apple's going to get 30% if he ends up managing to charge people, $8. So he's realised this and thought, I need to take them on. But all this has been done before. Epic Games has had a huge fight with Apple, went to the law courts. This is the time in 2019. This was the company that made Fortnite. Every kid was playing that game, on their mobile, and they lost, right? And so let's see if, Elon Musk, is he going to go to the courts again, or is he going to try and bully Apple? It's very hard to bully the biggest company in the world, so it's going to be a fascinating fight.
I mean, is Apple also a huge advertiser on Twitter? So does it impact revenue on that front?
Yeah, Apple's one of the biggest advertisers on Twitter. I think it's a huge amount. They do advertise. Most of Twitter's revenue comes from advertising as well. I think it's about 4.1 billion last year. Apple, I mean, we saw on the Twitter fight, Apple's pulling back from advertising. So is everyone else, right? They're not the only one. So this is a huge problem for them.
So does Elon Musk have any leverage in the
I think he has some. It helps owning Twitter, for example, the place that most people like to pick a fight. But also, Apple doesn't advertise on Facebook, for example. I mean, Apple's got an amazing advertising machine, but it did really focus on Twitter. And so pulling back from that, I'm sure they'll find ways of selling their goods. They don't have a problem with that. But still, it's not a great fight to pick.
Giles, overall, I mean, I watch Twitter all the time, and it's really Elon Musk tweeting like 24/7. Is this working? Is it too early to say whether people are leaving the platform or coming back to the platform? Like, it's unclear exactly what's happening right now.
Well, he says it's going great, but I guess he would say that. But I think with this particular fight, this is a really good fight for him to pick, because lawmakers both in Europe and the US don't like Apple charging 30%. Yeah. It's a gatekeeper. They think it should be fairer. This is a fight that he could potentially win, because he's got a lot of, especially Republican lawmakers, on his side with this. Yeah. And you can see him doing plenty of lobbying in the politics sphere with the upcoming US election. So maybe this is all part of that. And maybe this is the fight he could potentially win, or at least bring down that 30% figure. I
mean, he would have known this before, right? That they charged 30% because of the Epic fight.
I don't know. I couldn't say. Sometimes I get the feeling he comes in every morning, learns a new thing, and then says it on Twitter. So I can't say.
All right, Giles, thank you so much, as always, for your insight. Giles Turner there from our media and tech team. Now, the other thing we're watching is European football. Yes, this is Juventus plunged into crisis this morning after the chairman, but also the entire board resigned amid a probe into alleged wrongdoing related to the company's last 3 financial findings. Also coming up, Paul Mashatile, tipped to be the next deputy leader of South Africa's governing African National Congress. He already holds 3 of the party's top positions. We'll get his views on reviving the economy. This is Bloomberg.
Inflation's been stubborner than I would like. And I don't start with the idea of a rate path. I start with the idea of getting control over inflation. And as long as inflation stays elevated, it just makes the case to me we need to do more.
Further tightening monetary policy should help restore balance between demand and supply and bring inflation back to 2% over the next few years.
They will come down, I think. That's my baseline, but they probably won't come down quite as fast as markets would like.
It will take some time, but I'm fully confident that we'll return to a sustained period of price development.
Very supportive of a path that is slower, probably longer, and potentially higher than where we were.
Only recently moved into restrictive territory, and we're going to have to move farther in order to keep inflation under control. I think we probably have to stay there all during 2023 and into 2024.
Well, Fed officials, they're stressing that they will raise borrowing costs further to curb inflation. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. China says it's going to ramp up COVID vaccinations for senior citizens, a move regarded by health experts as crucial to removing tough COVID zero curbs. But Beijing stopped short of announcing mandates for compulsory jabs. Last night saw a heavy police presence deployed in major cities, which prevented a repeat of the weekend's protests over anti-COVID measures. Christine Lagarde said she would be surprised if Eurozone inflation had peaked. The ECB president's comments suggest the central bank's recent ramp-up in interest rates is not close to being over. Speaking to lawmakers in Brussels, she also warned growth will continue weakening into next year. UK Prime Minister Rishi Sunak says the so-called golden era of British relations with China is over. In his first major policy speech, Sunak said Beijing cannot simply be ignored, especially on issues such as global economic stability or climate change. He says the UK will work with allies to manage what he called sharpening competition with China. Hawaii's Mauna Loa, the largest active volcano on Earth, has erupted for the first time in nearly 4 decades. Local officials opened emergency shelters after the volcano began erupting late Sunday, blanketing the sky with ash. Officials have not issued evacuation orders and air traffic remains unaffected. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Laura Wright in London. Now, let's also look at what Juventus is doing. The share price for Juventus dropping after the chairman, Andrea Agnelli, and the entire board has resigned. Now, this is a pretty dramatic exit. It follows an investigation by the Public Prosecutor's Office in Turin and Consob, Italy's market regulator, into some of the football club's recent financial balance sheets regarding alleged false accounting and market manipulation, something that the club has denied. They have denied any wrongdoing. Just a reminder, Juventus currently ranked third behind Napoli and AC Milan in Italy's top football league, that's Serie A. In the meantime, this is what the markets are doing, a bit of a lift-off for these European stocks. They opened higher. Nationwide unrest in China over COVID curbs seem to be easing, and that's boosting sentiment for riskier assets. Coming up, we go live to the World Travel and Tourism Council Summit in Riyadh to discuss post-COVID travel trends and expansion plans with Accor's chairman and chief executive. This is Bloomberg. Your top stories today: risk returns, a rebound in Chinese shares actually pushes global stocks higher as unrest over COVID curbs eases amid a heavy police presence. Tightening tilt, Fed officials stress the need for more hikes to break scorching inflation, even if at a slower pace. Plus, Musk rounds on Apple. The billionaire owner of Twitter attacks the iPhone maker in a flurry of tweets, risking ties with the top advertiser. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, leisure companies have been seeing travel rebound post-COVID, but rising inflation also presents a challenge for the outlook. Let's go straight to Bloomberg's Youssef Gamael-Din, who's at the World Travel and Tourism Council Global Summit in Riyadh. So, Youssef, over to you.
Yeah, thanks, Fran. Just people left and right, real buzz that continues to build here at the WTTC. I'm happy to say that we've been having quite a few conversations with top brands, and we need to add another brand to them. That is, of course, Accor. Very pleased to be joined.
The last one.
By best for last.
Absolutely.
Right? Chairman and CEO Sebastian is a good friend, of course. Talk to me about this whole concept about pent-up demand, because I'm getting a bit tired of it. Because everybody's basing their outlooks for the end of this year on pent-up demand. How much of that is really going to carry through to 23 and 24?
Well, we're pretty convinced it's going to be carrying at least for the first quarter of 2023. First semester, I don't know. 2024, I have no idea. No, seriously, with what's happening in the world, with inflation, with maybe recession, thank God we had a good 2022. I think we're going to have a good first semester 2023. And then the odds are, I don't know. But I'm a true optimist, so it was better recovery than we expected, stronger demand, and so it should be carrying on as long as people have the wherewithal to travel and money to spend on leisure.
You've made some big bets on China, as have many others in the industry. You've seen the images over the weekend coming through in terms of the protests, the zero COVID policies. Yeah. How does that weigh on your outlook for the new year? I mean, does that change anything for you at the moment? What are you hearing?
No, it's too late to change anything anyhow. So I guess you just have to make a long-term bet on China. We've been in China for 45 years. So another year and a half of hiccup, I can cope with this. So, I mean, you know, we need the Chinese travelers to come back outside of China, but we haven't seen them for the last 3 years. So we probably won't see them until summer at best. Good news is the Chinese hospitality market is today in the hands of 93% Chinese customers, and it works. It actually works better than I expected myself. So I need the Chinese outside of China, but I'm probably okay with Chinese remaining closed for the international travelers.
Now, a lot of CEOs have been coming here to Saudi Arabia to try and sign additional deals to, I guess, make up for weakness elsewhere. Have you been able to make any new progress? I know you've already got quite a bit in the pipeline.
Well, we moved, first of all, you said, we're moving from the doom and gloom of Europe to come here to recharge the energy as if you were going to Singapore.
That's what you said.
That's what I'm actually beginning to get a kind of actually supplemental energy. Now, there is a lot of momentum here, And I guess we're in Saudi Arabia here, and we talked about it. I've never seen a country in my life in which you have a leader, a plan, a vision, geography, financial resources, and expertise and access to brands. So what's happening here probably never happened in the world for the last 20 years. So we just want to be a participant, but you know who I am. I hate to be a spectator, so I want to be an actor of my own life. So I just want to participate, collaborate, and be useful. But go to Abu Dhabi, go to Dubai, go to Qatar. They're doing superbly well as well.
So what kind of deals might you be looking at here? I mean, in terms of the expansion into the kingdom.
I'm trying to convince everybody that we have to shift the mindset from targeting to traveler to target to local. So I want the Accor hotels tomorrow to be really designed for the local community, because if you seduce a Saudi in Saudi Arabia, the travelers will pick and choose your hotel because it's a buzzing destination. So just reshifting our own mindset. But here, I'm going to go from mid-scale to premium to resort. We are all over. I need to be stronger.
I'm going to drag you to rainy and cold Europe for a moment, just to get your view on the room rates that keep pushing higher. Is that sustainable, in light of the impact of a recession that is still very much rippling through the economy?
Well, I think France is going to be avoiding recession. I'm not an economist, but I guess we're so much of a subsidized country. When it goes very well, we don't go very well. When it goes very bad, we don't go very bad. So France should be out of recession. UK, unfortunately, might be. It's one of those things where we've been coping with minus 80% occupancy for 2.5 years. Every time there's a recession in the world, minus 3, minus 4, RevPAR goes almost to the same indexes, which is minus 3, minus 4. I can tell you, we can cope super well with a minus 3% activity when you've been going through minus 80%. So I don't wish for it, but we will adapt for it in a much better manner than we ever did in 2008, 2009.
The variable that all of us have had to deal with is inflation, and now you've got a bit of experience in handling inflation. In retrospect, what conclusion do you take in terms of implications for room rates and occupancy rates?
Well,
what has the impact been?
Well, the impact of it, we've done the mathematics for Accor. If we increase our own price per room by 5%, that means we can actually afford probably a 7 to 8% recession on energy and on payroll. So it's only 5%. Can I meet 5% uplift in 2023? I think I am. By the same token, we are hotel operators. We don't own the assets anymore. So I have to admit, most of the burden is on the asset owners as opposed to the hotel operators. So, but I'm not going to be blind about it. I'm trying to cope with it with my own owners, but it's less of my problem than some of my asset owners' problem. But again, in hindsight, Accor have a huge procurement activity. We do 5 billion of buying. We've been buying energy for 60% of the network up to 2024. So they would not see any energy inflation because of what we've been basically pre-buying a year and a half ago.
Seb, you're going through a reorganization internally. I'm wondering to what extent there's room for further job cuts as part of that reorganization, given the reality that you're seeing in the economy, no?
Youssef, I'm missing 40,000 people within my 280,000 people organization. So don't even think about a job cut. I need people back at Accor. That reorganization is only trying to have better expertise, more focus in the right segment. So we're splitting Accor in 2 autonomous divisions, Eco, mid-scale, premium, and 1 on luxury lifestyle. It happens to be different segments, different owners, different clients. And I was dumb not to have done it earlier. Probably did not do it because I didn't have the skill, ability to do it. But it's indispensable, and it's live on the 1st of January. And sense of ownership from my executive team is far better than I ever expected myself. It's going to work extremely well, but you will not be at any job expense.
Sebastian, always a fan of our conversations, very candid discussions. Thanks again for your time. That's Sebastian Bazin, the CEO and chairman of Accor, joining us here at the WTTC in Riyadh.
Youssef, thank you so much. Youssef Gamal-Din at the World Travel and Tourism Global Summit in Riyadh, there with the Accor chief executive. Now, coming up, we speak to the man tipped to be the next deputy leader of South Africa's governing African National Congress. Paul Mashatile joins us next after the break. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. EasyJet says enduring demand for discounted flights should allow it to return to pre-pandemic levels of capacity by next summer. That's as the UK-based budget airline narrowed its headline pre-tax loss for the year to the end of September to £178 million.
Coming into this year with a record bounce back, it's a £1 billion bounce back that we did, and we achieved also the highest earnings ever in the last quarter in the company's history. So what we're seeing now for this winter going forward is that the peak periods are doing really well.
Crypto lender BlockFi has filed for bankruptcy, becoming the latest digital asset firm to collapse in the wake of the FTX fiasco. BlockFi says it will use the Chapter 11 process to focus on recovering all obligations owed to BlockFi by its counterparties, including FTX. The firm has asked clients to refrain from depositing more funds. A fight seems to be brewing between Twitter and Apple after Elon Musk accused the iPhone maker of threatening to keep the social network off the App Store. Musk also says Apple has cut advertising on Twitter, which he acquired last month. Apple has been one of Twitter's top advertisers, with a spend said to be above $100 million a year. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Now let's turn to South Africa. The economy is likely to have averted a technical recession in the third quarter, despite record power outages. Now, reviving a struggling economy and dealing with embattled state-owned power utility Eskom will be, of course, key issues as a ruling African National Congress party's leadership race kicks off next month. Now, the ANC is battling to rebuild support after its vote dipped below 50% for the first time ever in a municipal election last year. Now, this comes as the party looks to protect its majority in 2024's general election. Well, joining us now is Paul Mashatile, Treasurer General for the South Africans ruling African National Congress. Mr. Mashatile, thank you so much for joining us. Now, the governing ANC will also hold its elective conference next month. It's no secret that the party has been dogged by some internal fighting or internal divisions. Have those been addressed? How are you expecting the Congress to go?
Well, of course, it's going to be a very challenging period for us. We are going into this conference prioritizing the unity of our members, all our structures. And that's why the theme of conference is unity and renewal. We want to come out of that conference very strong, united, so that we can tackle the challenges that the country is facing. As you have been saying just now, that we have the challenges with our state-owned enterprises, particularly the likes of Eskom, which lead to challenges like load shedding. So yes, serious challenges, and it will need a leadership that is united, the leadership that can pull together.
Mr. Mashatile, you've also received the most nominations for the post of deputy president. What kind of things are you promising in terms of energy, in terms of unemployment, in terms of inflation?
Well, I think the important thing is to get the economy right and get it right faster. The ANC has got a lot of good policies. So our focus should really be on implementation. I think we need to make sure that we implement much faster, because if we get the economy right, we can create employment, particularly amongst young people. So it will need that we sort out challenges of Eskom, look at other state-owned enterprises like your Transnet, PRASA. We're going to be putting a lot of resources to drive infrastructure development.
There was a lot of promises at the conference 5 years ago, nationalizing the central bank, establishing a state bank, and a change to the constitution to make it easier to seize land without compensation. None of those have happened. Are they still on the agenda?
Indeed, as you say, the conference in 2017, the 54th National Conference, did take a decision to nationalize the central bank. There were challenges in government, and that was not really done. So you might find that the debate will come back. My view is that we should allow the debate to take place, but we should emphasize the fact that we do want a central bank which will continue with its independence as guaranteed by the Constitution.
Do you see the ANC retaining its majority into the 2024 election? And actually, simply put, what can you do better to make the lives of all South Africans easier in the future?
Yes, the ANC at the moment is strong enough to retain its majority come 2024 elections. We're working well with our alliance structures and our structures on the ground. So we're going into that election to win decisively, and that's where we're putting all our efforts.
But there are some key metrics where South Africa has gone backwards in terms of hitting those metrics. I'm talking about the poverty line, people who are unemployed and below the poverty line. So specifically, what can you put in place to make sure that the most vulnerable are protected?
Well, as you know, that we have approved at the government level some relief mechanisms, some grants. But also, I think it's important that we put all efforts to drive economic growth and have a public service that is geared towards service delivery. That's why government has introduced a new mechanism to ensure that there's a new national framework on public service with people who are well trained, who are skilled to be able to deliver efficiently.
Mr. Mashatile, when you look at some of the things that we focus on, and you do believe that the ANC will win an outright majority, if it doesn't, who are you ready to be in coalition with in 2024?
Well, we have decided that we should focus on winning the election because for us it's important. We think coalitions are a problem. If we look at what's happening in local government at the moment, a lot of instability. We will cross the bridge when we come to it if we are in that situation where we need to consider coalition. But for now, we're fighting to win.
How much of a problem is dollar strength?
How much of a problem is?
Is a strong dollar given for emerging markets in general, but for South Africa in particular?
Well, as I said, as the ANC at the moment, we are trying to fix our economy, fix what's happening in government. We're going to focus on implementation. And come next year, we're starting our campaign to win the general election and win it decisively. So for now, we're really not entertaining coalitions, so to speak.
All right, thank you so much, Paul Mashatile, Treasurer General of the African National Congress, joining us this morning. Now, coming up, as Russia continues to target Ukraine's vital infrastructure, we're live from Bucharest, where NATO foreign ministers are gathered to discuss developments in the war. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, NATO foreign ministers are gathering in Bucharest for an extraordinary meeting as Russia intensifies attacks on Ukraine's energy infrastructure, plunging the country into darkness and freezing temperatures. Now, for more, we go to our Maria Tadeo, our European correspondent, who is in Bucharest. Maria, what exactly is topping the agenda?
Yes, Francine. Well, a lot on the agenda, but also the significance of this moment and this location in particular, because Francine, I'm sure you remember back in 2008, the Bucharest NATO meeting. That was the first time the Ukraine membership to NATO was put on the table. And of course, we know the story. More than 10 years later, there's no membership for Ukraine, and there's now a full-scale war going on in the country. Now, today already we heard from the NATO Secretary General, Francine, who says there needs to be a comprehensive package for Ukraine. He's pleading allies for this package, which of course includes military equipment, but he says there needs also other issues like fuel, medical supplies, but also, and he really emphasized this point, winter equipment that can help the country. He says Ukraine is, quote, facing now a horrific winter. We know their energy infrastructure has been severely compromised. The country is in darkness. And of course, you're starting to see now temperatures go below zero. A terrible winter, of course, for the civilian population in Ukraine.
So, Maria, what about China? China is also going to be debated.
Yes, Francine, and I'm happy you mentioned and stressed that point, because the Secretary General today, in some of the briefing comments that he made, still highlighted and reiterated NATO needs to be alert and aware about the issues when it comes to security in China. And remember, it's no coincidence this year NATO changed its definition of China, which is now, quote, a challenge to the NATO security alliance. He says this is not a threat to China. It's just an obvious manifestation that China is a competitor when it comes to cybersecurity. He also says Chinese companies have been trying to really bid into the European market of critical infrastructure. He also mentioned 5G and repeated NATO members have to be extremely alert when it comes to China.
Thank you so much, Maria Tadeo. They're covering NATO's meeting today in Bucharest for us. Now, the other story on the corporate side is, of course, what's happening with Juventus. Juventus dropping in today's trading session. I think we have a board that we can actually put up to look at what exactly it's been doing. It was down some 10%, then down 4%, now down 2%. Now, the story there is allegations of wrongdoing. We know that we need to wait for the investigation. We know that not only the chairman, but the whole board actually resigned. Juventus plunged into crisis after the chairman and the entire board resigned into alleged wrongdoing related to the company's lost 3-year financial filings. This is a pretty dramatic exit. It follows an investigation by the public prosecutor's office in Turin, but also an investigation by Consob into these market regulator into some of the football club's recent financial balance sheets regarding alleged false accounting and market manipulation. The club has denied any wrongdoing. European stocks overall open higher. They continue the push higher as nationwide unrest in China over COVID curbs eased. That's boosting sentiment for riskier assets. The other thing we need to watch out for, and I'm looking at euro dollar, but a lot of the movement is actually on European yields, is that Spanish inflation eased for a 4th month and by more than expected. That is reinforcing expectations for a wider slowdown in European prices, and it could also offer some comfort to the government, whose aid measures have brought record budget spending. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, our Anna Edwards here in London, and this is Bloomberg.
I start with the idea of getting control over inflation. And as long as inflation stays elevated, it just makes the case to me we need to do more.
They're counting the first 250 basis points as if that was a tightening of monetary policy, and we're going to have to move farther.
It will take some time, but I'm fully confident that we'll return to a sustained period of price stability.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The Fed makes it clear more rate hikes are on the way. Policymakers stress that borrowing costs must rise in the fight against inflation. China clamps down. Beijing responds to widespread protests by putting more police on the streets and censoring social media. We have news on COVID. And Elon Musk picks a fight with one of Twitter's top advertisers. He's asking whether Apple hates free speech and criticizes its app fees. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And clearly a focus on the Fed narrative, a focus on tech majors such as Twitter and Apple, Kailey. But from a market perspective, we had been pretty obsessed with what was going on with China over the last 12 hours or so. That has faded a little bit, though, that China COVID boost in European markets.
Yeah, well, we have definitely seen a big boost in the Asian session, even if it is fading in Western markets, Anna, because all of that unrest and the protests around COVID lockdown seem to have calmed down, in part because of the government response and a heavy police presence, which was aimed at cracking down on that. But you also seem to have concessions from Beijing. They're going to up vaccinations for people 80 and over, plus maybe reduce some of those testing requirements. So all of that together lifting risk sentiment in Asian markets, specifically for Chinese stocks. The Hang Seng China Enterprise Index up more than 6% overnight, and an even bigger move for technology stocks, with the tech index up about 7.7%. And that's rippling through to foreign exchange as well. The offshore Chinese yuan, one of the biggest outperformers against the dollar among Asian currencies, strengthening by nearly a full percentage point. Just shy of 718 is where we trade. And I wanted to point out the Chinese 10-year yield as well, up 3 basis points overnight to 290. We started the month of November at 266. So this has been a pretty sizable move. And that 10-year yield is now actually at its highest in about a year, Matt.
All right, we're looking at drops here as well in terms of yields and really the dollar. I think that's the most interesting thing here. S&P futures up about 0.2%. So, Anna, you're right. We have faded the gains that we saw earlier on hopes of China reopening, at least sooner than previously had been thought, but still looking at gains. And I think that's because we are losing the headwind of a strong dollar. In fact, a lot of people, JPMorgan is one of the banks out there saying maybe the dollar run is over here and we could start seeing new lows. That's why we see gains in European currencies. We saw that yesterday as well as today. NYMEX crude is up 2% right now, but only to 78.84 a barrel. So a little bit of gain after the drop that we saw yesterday morning or Sunday night. We were looking at a 73 handle. So it's actually a pretty big jump from there. And then Bitcoin right now up about 2% as well. Still holding around 16,000 and a half right now, 16,517. So not a heck of a lot of movement there. What do you see in terms of the European fade today, Anna?
Yeah, so we were looking at gains, Matt, across this European map of around 0.5% for some of the major markets, but those have faded, certainly in France and in Germany. The German market now down by around 0.2%. We cling to the gains in London, and London is up by 0.6%. You'll see that is really to do with energy and energy markets, energy prices. It's to do with energy stocks, and it's also to do with mining stocks. I'll show you where we are on those particular stories. We have Brent crude, of course, bouncing back from yesterday's losses. So whilst we've overall seemed to have shaken off some of the enthusiasm around the China reopening story, more on that in a moment, it does seem as if certain sectors are clinging to that theme, and energy markets is one of those. 85.15 on Brent. Lost substantial ground yesterday as a result of concerns around China protests. Now gaining this morning on expectations that perhaps there'll be some further reopening of the Chinese economy, and that is positive for crude. Basic resource stocks also helping out the London market, then up by 2% this morning. And here's the Italian 5-year yield. We've got yields coming down across Europe, and this is across the Eurozone. This seems to be quite a convincing move in today's session, particularly at the short end of the curve. It wasn't Italian data we got today. It was Spanish data. We just got one building block of the Eurozone inflation picture. But a lot of people asking, are we going to see a peak soon? Francine Lacqua saying she'd be surprised if we have peaked. It was the Spanish-Italian number, and it came in substantially below estimates. I put in the Italian market, though, because this is where we're seeing, of the G20, this is where we're seeing the biggest, most unusual outside move in markets. But that's where we yield right now for Italian 5-year debt. And keeping it Italian, this is a football club, a soccer club based in Turin in northern Italy, and the stock is down by just over 3%. The Juventus chairman and the whole of the board stepping down. Some controversy around the way that players have been valued in balance sheets. It seems that there's now an investigation going on into the last 3 years of financial filings for this business. The company denies any wrongdoing, Matt.
All right, well, we'll keep up with that story for sure. But main focus, I think, is going to be on the Fed. We got a host of Fed speak yesterday with policymakers stressing they will raise borrowing costs further to curb inflation.
Inflation's been stubborner than I would like.
Further tightening monetary policy should help restore balance between demand and supply and bring inflation back to 2% over the next few years.
They will come down, I think. That's my baseline, but they probably won't come down quite as fast as markets would like.
Very supportive of a path that is slower, probably longer, and potentially higher than where we were.
Only recently moved into restrictive territory, and we're going to have to move farther in order to keep inflation under control.
Of course, tomorrow we're going to hear from Jerome Powell. So this is a very Fed-focused week. Bloomberg's Danny Berger joins us now to break down the details of what to expect. Danny?
Yeah, Matt, it really feels like this last mile, this last push from the Fed before the blackout period begins. And I should say a hawkish push from them, which isn't necessarily surprising given financial conditions have loosened, stocks have rallied, treasuries have been bid. So maybe they want to undo some of that to keep inflation in check. I want to just pause on what Bullard said. We heard from him there just a moment ago. But he was saying yesterday that markets are underpricing the risk that they're going to get more aggressive and stay there, and said that the Fed needs to move to at least 5%. The market is going to have to do some repricing if it's going to factor that in. And you get Williams following up on that as well yesterday, saying that the path of inflation suggests that they will go higher. So what we have seen is a yield curve that continues to flatten, but it's been bullish flattening. In other words, it's been a bid into the long end. The front end hasn't really done much. Folks seem confident that we've reached cycle highs for the 10-year, for the 30-year. PIMCO, for example, is buying over there. But that 2-year yield has essentially sleepwalked. So yesterday, we got a cycle low of about negative 81 basis points in the 2s, 10s yield curve. 2s are at 4.4%. If they're going to get to that 5% that Bullard was talking about, Anna, they might have some readjusting to do leading up to this next Fed decision.
OK, but still a little way to go until we get there. Danny, thank you very much. Bloomberg's Danny Berger, building our way towards the last Fed meeting of the year. Now, in China, authorities have clamped down on protests against tough COVID restrictions with a heavy police presence in major cities. Meanwhile, the country plans to ramp up vaccinations for senior citizens, a move regarded by health experts as crucial to removing tough COVID zero curbs. China's National Health Commission spokesman spoke earlier.
We must correct the wrongful practices of arbitrary imposition of restrictions and provide services to people to meet their needs. We also advocate rapid and active vaccination, particularly the elder population, so as to protect yourself and your family.
Rebecca Chung-Wilkins joins us now, Bloomberg Asia government and politics correspondent from Hong Kong. Rebecca, it did seem as if you could draw a line between the protest activity and this commitment from health officials to hold accountable any local policymaker who's too sort of overzealous in their application of the COVID rules. So, maybe that's a win for the protesters. A lot of focus also on the vaccination rate and driving that up amongst senior citizens.
It does seem like we have seen quite a significant softening in tone from Chinese health authorities in particular, perhaps acknowledging in their own way, and at least, the very least, acknowledging there is a need to respond to what they've said is the reasonable requests to tweak policy around COVID. Over the last few days, we've also continuously been hearing that sort of Chinese authorities are always constantly adjusting policies, again, sort of just opening the door up for potentially going forward with loosening policies here. And as you say, investors and markets very happy to see signs that China is going to be vaccinating and focusing on vaccinating its elderly population. That seemed to be a very sort of weak point in its vaccination program that they will have to do if they want to reopen. At the moment, only about 40% of China's over 80 population has received their booster.
Well, Rebecca's saying markets look happy with some of this almost seems like an understatement, because we saw massive moves in Chinese equities overnight. How overdone does that seem?
Well, it's part of a really big reopening trade that just before the protests took off were roaring through Chinese assets, both in Hong Kong and in the mainland as well. There is a very sort of big bet that many people are taking that there will be significant reopening going into 2023, so the end of the first quarter, certainly going on into the second quarter. It really ultimately, I think, though, depends on whether or not China can roll out an effective vaccine program. And, of course, a lot of this is going to be decided by local governments. Central governments, of course, set the tone, but it's local governments who will have to take on the responsibility of potentially loosening loosening things too early, and then having to deal with the consequences and the pressures on their healthcare systems, for example. So there is both this issue of the central government setting policy, but also implementation, even once that comes through. And we are seeing now these sort of big spikes in cases across China. It's not like back in April where we saw really most of the cases in Shanghai. Beijing, Guangzhou, Chongqing, these are big centres where cases really are rising in earnest now.
Yes, just getting some headlines across the Bloomberg. Rebecca saying Beijing reports, earlier saying that they'd reported a number of COVID cases and saying that 23 makeshift COVID hospitals are in use. Things are changing fast, it seems, in China. Rebecca Jung-Wilkins joining us there with the latest news on the COVID fight. Let us get to some news from the tech sector coming to us overnight. Billionaire Elon Musk is publicly attacking Apple in a battle that pits the owner of Twitter against one of the company's top advertisers. Musk says that Apple has cut its Twitter advertising and threatened to block the social network from its app store. For more, let's speak now to Bloomberg's Giles Turner, who joins me on set here in London. Good morning to you, Giles. So explain how we've got to this point.
Well, I mean, everyone loves a Twitter fight, first of all. I mean, we've got the world's richest...
Even when it involves Twitter.
Exactly. I mean, we've got the world's richest person against the world's biggest company, so, you know, I think it's going to be pretty epic, and we get to how epic in a bit. But really, this is about Twitter making money, right? They want to charge everyone $8 for using Twitter. If you're going to charge that money, then Apple's going to get 30% of that. So $2.04, I think. So he doesn't want to have that because he needs to make money. Twitter has made money for a long time. I mean, he makes plenty of revenue, but not much profit, right? Or hardly any. So he's got to solve this problem, and one way to do it is try and claw back some of that $2.04 for every user.
So, you know, we keep asking this question ever since Elon Musk took over or really kicked off his bid. What kind of risks does it have to Twitter's ability to operate at all?
Well, I think even if it gets banned, for example, let's go for worst case scenario, you and me can still use Twitter. You won't be getting any new users, but everyone else can still use it. There also is a way around it. You can still, the revenue problem that is, you can still avoid, Twitter can still avoid paying that $2.04 to Apple if you download it from their website, for example. But really, I think it's a great opportunity for Musk to have a fight with the regulators on his side for once. We've been talking a lot about how he's had plenty of issues with regulators, especially around safety, because obviously he slashed the workforce by 50%. But regulators and lawmakers, both in Europe and the US, they really don't like the fact that Apple charges this 30%. It's a gatekeeper problem, and they don't really want that, they don't want it to happen. Now, they had a huge fight, Apple and Epic Games, the company behind Fortnite, back in 2019 that lasted for a few years, about this 30% problem, and Apple won, right? Maybe on a technicality, but they still won. They can still charge 30%, right? We might see this fight happen all over again, and maybe the result will be different.
Right. I mean, charging 30%, it should be said, on the App Store that they invented to put an app on the phone that they also produce. So it's interesting to say the least. Giles, thanks so much for joining us. Bloomberg's Giles Turner talking to us about Twitter v. Apple. In other TMT news, Disney's returning CEO Bob Iger has told employees at a company town hall that he'll look into some of his predecessor's more controversial decisions. One of those is requiring reservations for guests attending theme parks. Iger also said he'll focus on profitability in streaming and shot down a rumor about a possible merger between Disney and Apple, calling it pure speculation.
All right, Matt, and Disney shares right now up about 0.4% in pre-market trading. So let's take a look at some stocks moving to a larger degree in pre-market here in the U.S. And a lot of them are in the energy sector. Of course, these stocks were under some of the most pressure in the selling of yesterday, but they are rebounding this morning as we see oil moving higher. Halliburton, ConocoPhillips, Occidental Petroleum, all up in the ballpark of 1.5 to 2.8%. Another group of stocks that is moving higher is those Chinese technology companies that have listings here in the U.S., really following on the rally we saw in the Asian session overnight. Alibaba, Baidu, JD.com, all higher to the tune of 5.6 and even 7.25% in the case of JD. One stock moving to the downside, though, is Roku. This is after an analyst at KeyBank cut his rating on the stock, saying that the consensus is too optimistic for both 2023 and 2024. And as a result, Roku shares down about 2.6% before the bell, Anna.
Okay, we'll keep an eye on that one. Coming up on the program, we'll discuss the economic impact of the unrest in China and the policy response around COVID-19 that we've heard overnight from Chinese authorities. Diana Choi-Laver joins us, Inodo Economics Chief economist. And on the markets, Sharon Bell, Goldman Sachs European equity strategist, joins us. What does she make of the latest inflation data out of Europe? A question we'll also put to Irene Tinagli, who is the chair of the European Parliament's Committee on Economic and Monetary Affairs. She was hearing this week from Christine Lagarde. What does she make of the testimony of the president of the ECB? We'll get to that conversation and talk crypto with her as well. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London. Let's get back, though, to China right now. Health officials are sounding a conciliatory tone a day after police blocked more protests against the COVID restrictions there. They said excessive curbs should be avoided and questions about how COVID is being handled should be resolved quickly. Joining us now is Diana Choileva, chief economist at Inodo Economics. And Diana, yesterday it seemed as if the protests would only strengthen the resolve of the party to lock down the country in the face of COVID. Now it looks like they're offering a bit of an olive branch. How do you see it?
I see this as the most minute olive branch, really, and market optimism seems misplaced at this stage. The Chinese authorities' first reaction was to make sure that they ramp up their propaganda apparatus and clamp down on social media and the dissemination of information, but as well as that on the protest, as you said. And they seem to have the upper hand in the system that China has. It's extremely difficult for these protests to gain momentum. The levels of control and the use of technology in achieving it are pretty extraordinary.
Diana, why is Xi Jinping so intent on this incredibly draconian COVID-0 policy rather than, using vaccines that work from the West or letting the disease run its course?
He's in a difficult position, really, really tight spot. And actually, the protests are making his situation worse because he would have been much more willing to relax the zero COVID policy more substantially on the basis of the economy underperforming and really struggling. The problem he faces now is that these protests are linking the lockdowns with a more generalized pushback against increased authoritarianism in China, which really the COVID lockdowns brought down to the everyday life of the Chinese in a way that they haven't had. So now that there is this linkage and the protests are directly against the very top rather than the local governments, she's actually facing an even worse dilemma of how to exit from the zero COVID strategy without losing face. And if you get Western vaccines or you change dramatically your policy and start accepting significant debts that they will have to have, then that is really untenable from a political perspective.
Can I ask you, as an economist then, Diana, what kind of assessment do you make as to how long it will take China to open up? If you think about the things that will be important here, the vaccination rate, the number of ICU beds that are available, and the death rates that China is prepared to tolerate from this, how long does it take to China to lift all of the COVID rules?
Look, China is in a kind of a slow motion real economy crisis. Clearly, they're ramping up monetary stimulus and debt-fueled investment, but that's really hitting against not just the lockdown dislocations and disruptions and the devastating impact that these lockdowns have on consumer spending, but also actually on the fact that China really is over-indebted and can't afford this debt-fueled growth for much longer. It certainly is going to get a lot less bang for its buck. So the economy is in a really tough spot, and she doesn't have a clear-cut exit strategy. And any exit strategy will involve continued economic pain. So this is a situation that I think the way markets are reacting today, it's very surprising, given that what the Chinese came up with this overnight was a lot, one could argue, even weaker than the 20-point relaxation that they had earlier, which we also described as just tweaking.
Well, we are continuing to get headlines out, Diana, from China. Beijing's Chaoyang district says that elderly and kids can skip daily COVID tests, so maybe some degree of relaxation there. We've talked a lot about kind of the near to medium term impact on the Chinese economy, but I'm wondering about longer term effects. How much damage has been done to China's reputation as a place for companies not based there to produce their goods, like Apple, for example, is the one that comes to mind, or really just as a partner in trade? That seems much longer lasting as companies look to reshore.
Well, this is part of the general great decoupling theme that has been our key investment theme over the last 3 years, the bifurcation of the world into two spheres of influence, a US and a China one. And COVID and China's response to COVID has exacerbated that split. And actually what China is doing right now is damaging its reputation as a reliable trading partner, which is adding to the geopolitical concerns that are causing reshoring and the great decoupling.
And there's a huge question about what that means for the growth and inflation trajectory in the global economy. Diana, we have to leave it there, but thank you so much for joining us with your insight. That's Diana Chwaileva of Inodo Economics. Now, keeping you up to date with other news from around the world, let's get the first word. A bill in the U.S. Senate protecting same-sex marriage has cleared another procedural hurdle. A vote on final passage could take place this afternoon. If it passes, the measure then goes to the House. The bill would recognize same-sex marriages under federal law and ensure benefits for all married couples. Former Vice President Mike Pence is calling on Donald Trump to apologize for having dinner with a white nationalist. In a TV interview, Pence said the former president showed profoundly poor judgment. Last week, he dined at his Mar-a-Lago resort with rapper Ye and white supremacist Nick Fuentes. President Biden and House Speaker Nancy Pelosi are moving to prevent a strike that would shut down the nation's freight railroads. The House is preparing to take up legislation to impose a labor settlement despite the objections of some unions. A rail strike could hurt the economy by crippling supply chains. And BlockFi has become the latest crypto firm to collapse in the wake of the downfall of FTX. The digital asset lender says it will use the Chapter 11 process to recover everything it is owed by its counterparties, including FTX. But BlockFi acknowledged that recoveries are likely to be delayed by FTX's own bankruptcy. So, Matt, another domino has fallen. It's one we all were largely expecting to fall, considering BlockFi already had its issues, got bailed out by FTX, then FTX itself needed a bailout. The question is, what's the next shoe to drop? We're still looking to see if Celsius got the funding it said it needed.
Yeah, absolutely. And I think the BlockFi
or Genesis,
shoe,
rather.
The BlockFi shoe was already had already dropped. I think it'll be very interesting, you're right, to watch what happens with Genesis and Gemini. I think that's what a lot of market participants are kind of holding their breath for. BlockFi seemed beyond saving, the other two not so much, Anna.
Yeah, absolutely. And we'll get to the regulation conversation on this. We talked about this yesterday, didn't we? Talk about the sort of regulatory arbitrage in different parts of the world. And certainly the Europeans ploughing ahead with regulation, the MiCA framework. Do we need a MiCA 2? Christine Lagarde was talking about that just yesterday. Before we get to that conversation, we will talk to Sharon Bell, Goldman Sachs European equity strategist. What does she make of the London market right now? It outperforms on days like today when we see energy and mining stocks jump. Is that enough to get in and buy that market, or do we need further confidence in the UK infrastructure and the UK markets more broadly? We'll have that conversation shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed makes it clear more rate hikes are on the way. Policymakers stress that borrowing costs must rise in the fight against inflation. China is making some quiet concessions on COVID limits a day after police blocked more protests. Authorities are easing up on some restrictions and also pushing to bolster vaccination among its senior citizens. And Elon Musk picks a fight with one of Twitter's top advertisers. He's asking whether Apple hates free speech and criticizes its app fees. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, global markets, risk appetite was wobbling a little half an hour ago. I don't think it was anything we did, but it seems to have recovered slightly. It was pushed along overnight by the better news out of China, it seems.
Yeah, slightly better news, right? I liked how Diana Troileva put it earlier. She said it's a minute olive branch. You really have to squint to see those concessions, but as we know, the markets love to front run good news. They want to get it before everyone else does. So when it's not there, sometimes they kind of make it up. In any case, we're looking at S&P futures gaining about 1/3% right now. We did close down 1.5% yesterday in the cash trade, back below 4,000. So we're trying to claw some of that back. The Bloomberg Dollar Index, which, you know, the strength a month ago or 2 months ago had been a real headwind for equities, has dissipated quite a bit, and it continues to come down with a number of banks saying they now think that their bullish bets should be reversed on the dollar. So you can see gains in the euro and other currencies against the greenback. Right now, 12.73 is the BBDXY. NYMEX crude coming up a bit, 2.7%. Maybe this is on reopening hopes for China, now up to 79.33. And remember, we saw a 73 handle early yesterday for WTI crude. So that's a substantial gain. And Bitcoin is up, but it's not terribly substantial, still hovering around the same $16,000 level we've seen ever since the implosion of FTX, right now trading at $16,499. Kailey, what are you seeing in terms of pre-market movers this morning?
Well, Matt, it may not be a massive move for Bitcoin, but it's still enough to give a little bit of a lift to crypto-related equities like the exchange Coinbase, which is actually higher by about 2.3% in early hours this morning, recovering some of its 4% loss yesterday. That was in part spurred by the bankruptcy filing of BlockFi. Other stocks that are moving higher include most in the energy sector with the gains in oil that you were mentioning, Matt. Exxon is one of them, up about 1% in early hours. And then following on from the gains we saw in Asia, all of that optimism around the China news that you and Anna were just discussing, we are seeing that some of those Chinese tech stocks that also have listings here in the U.S. are gaining. The ADRs of Alibaba up about 5.8% and JD.com up about 7.5% before the bell, Anna.
We're seeing here in Europe, Kailey, then, a bit of a bounce back from yesterday's losses for European equity markets. And this is all to do with China and the reopening trade there, getting people excited, rightly or not. So the stocks Europe 600 up by 0.3%. Brent crude is up by 2.9%. Again, bouncing because of that change in the China dynamic overnight. Basic resources, one of the sectors doing well in London, up by 2.4%. That and energy names help to cushion the London market from any downside on a day like today and helps the London market outperform. I've got the Italian 5-year yield here just to underscore what we're seeing on Italian debt markets today. We got the Spanish inflation number. The inflation number came in lower than had been expected, and so that has brought yields down across European markets. And this is a member of the G20 for you, just showing where we're seeing those yields coming down. But if you want to see the bigger moves, Spain, Portugal, the yields there certainly making some big moves lower as a result of changing expectations about how much hiking the ECB has to do. We get the full Eurozone inflation print tomorrow.
Well, Anna, let's continue the conversation about the European economy and how it translates into an equity thesis. Joining us now is Sharon Bell, Goldman Sachs European equity strategist. Sharon, your colleagues at Goldman put out a note related to the U.S. economy and markets yesterday, saying that essentially U.S. equities are not correctly pricing in the risk of a recession, which Goldman puts at about 39% probability in the next 12 months. They say equities are only reflecting about an 11% chance. What's the risk in Europe, and is that appropriately priced?
So I think the risk of recession in Europe is a lot higher. In fact, we think that would be our base case, that you see a recession. We think Europe is in recession really now in the fourth quarter, and that will probably last into the first couple of quarters of next year. So I think the risk of recession is very much higher in Europe. Europe doesn't have energy independence. We have very high inflation, even if it's starting to come down from these incredible high peak levels. And that's obviously causing a decline in real incomes. But European equities are much less expensive than US equities. So the PE For Europe, it's probably only about 11 or 12 times, whereas it's, say, 17 in the US. So I would argue that a little bit more of weaker growth is priced into Europe than the US. But in both cases, we worry that cyclicals have bounced a lot. There's a lot of enthusiasm priced generally into global equities, and we think that's a little bit overdone.
Okay, so maybe the economic growth story is more appropriately priced in. What about the earnings growth story? Are those expectations still too high?
In our view, yes, on both sides of the Atlantic here. In the US, we expect zero earnings growth for the S&P companies next year, which given sort of the trend rates that we've seen in recent years, high single digits earnings growth has been quite typical for S&P 500 companies. Zero is going to feel pretty low. And that's really because margins are still coming down. Companies are facing higher costs, labor costs, material costs, etc. And it's going to be trickier to pass those on to households and consumers when growth is slowing and pretty weak. And in Europe, a very similar picture. We're expecting actually earnings to fall next year by about 8% in Europe. That reflects the kind of gloomier picture we have for European economic growth. And again, we think the consensus, which is still for a little bit of positive growth in Europe, is a bit too high. And the main difference between us and consensus is on margins. We think companies will face higher costs and it'll be trickier to pass those on.
Sharon, good morning to you. What's the Goldman Sachs view on how substantially we should view the changes overnight from China on COVID zero? And I ask this, I know that your role in European equities, of course, will be watching this your team will be watching this very closely because there are so many industrial businesses in Germany or luxury goods companies in France that have made so much money in China. So what is the take as to whether these are really micro moves? It's the thin end of the wedge. It's the start of something that really gains momentum in the spring and summer.
So, look, absolutely, China is really important for European companies. And although I sort of painted a gloomy picture for the European economy, we do think Europe is in recession at the moment. European businesses, particularly the large listed ones, are global. They make less than half of their money in Europe itself. And China in particular is a big portion of sales and trade. We sort of tot up the numbers and come up with about 10% China exposure for European companies, but it's probably even a little bit larger than that if you consider the interconnections with China globally go very, very deep. So China's recovery is really important, and a move away from the kind of rolling zero COVID policy that we've seen is important. We think that the moves so far are really incredibly small on that front, and it will take several more months. We probably won't see really a move away from zero COVID until perhaps the second quarter of next year. So the market is right to anticipate it, but perhaps again a little bit too early in doing so.
I saw some comments today, and thinking about your view on the FTSE 100 or the FTSE 250, Sharon, it's a day like today where we see outperformance in London because of exposure, of course, to mining, basic resource, energy stocks. I saw a comment from the Lloyds Banking Group CEO, Charlie Nunn, earlier, who says that global investors are nervous about investing in the UK. Does that come up in conversations about UK equities?
Absolutely, it does. People are pretty happy with the concept that FTSE 100 is not very exposed to the UK. About a quarter of FTSE 100 sales are domestic to the UK, meaning 3/4 outside the UK. Lots of dollar earnings there, lots of China earnings, lots of global growth, lots of resources and commodity companies, obviously linked to China, therefore, but linked to the global growth generally and growth in the US. There is a little bit more skepticism on mid-cap businesses because they tend to be a bit more domestic. They also tend to suffer at times where you've got higher costs and higher wages. They tend to find that more difficult to pass on to their customers. I do think there will be recovery in the UK as we go through 2023, but at the moment it is a difficult patch, and there is nervousness from global investors in investing in those kind of more domestic-focused companies in the UK.
Are there recession-proof sectors or companies that you like, Sharon?
I mean, companies don't tend to ever be totally 100% recession-proof, but I guess the businesses that tend to have the lowest beta to the economic problems, say in the UK, would be global companies, would be healthcare companies in particular, would be companies which have got businesses which make a lot of dollars. Things like commodity companies, mining companies, oil companies. They suffer with economic downturns globally, but bear in mind there's a lack of supply in most of those areas. So they are still seeing quite high prices. And then finally, one thing about this downturn is it's coming with higher interest rates. And higher interest rates is generally quite good for financials. So that's another area, perhaps of more resilience this cycle than has been typical.
You're speaking at the Goldman Sachs Resilient Business event at Oxford, and I wonder, especially small businesses, how resilient can they be?
So in some ways, I'm surprised at how optimistic and resilient the small businesses are. The conference that I've been attending and speaking at, it's great to meet smaller businesses. These are the people that are growing the economy. These are the entrepreneurs that are hiring, creating jobs, creating growth for the economy. So, and they absolutely are aware that from a kind of big macro top-down angles, things are pretty bad. We have inflation, we have a cost of living problem in the UK, we have very weak growth, we are probably in recession. But all those things also create opportunity as well, which they're looking for. And I think we call this conference resilience because we think businesses should be thinking more broadly about their resilience. We know there's a lot more volatility now. Given the scarcity of labour, given the scarcity of energy, given the scarcity of resources generally, it's going to be really important for businesses to be resilient.
Yeah, and resilient to higher interest rates. Sharon, thank you very much. Sharon Bell joining us there from Goldman Sachs. Thank you for your time. Coming up, we will talk to Irene Tinagli, who is the chair of the European Parliament's Committee on Economic and Monetary Affairs. She was hearing yesterday from Christine Lagarde of the ECB. What did she take away from that conversation? We'll talk about monetary policy, inflation, also crypto. This is Bloomberg.
In this environment of high uncertainty and with complex shocks hitting the economy, the Governing Council decisions will continue to be data-dependent and follow a meeting-by-meeting approach. How much further we need to go, how fast we need to get there, will be based on our updated outlook, on the persistence of the shocks, on the reaction of wages and inflation expectations, and on our assessment of the transmission of policy stance.
That was the ECB President Christine Lagarde, of course, speaking at a hearing before the European Parliament's Committee on Economic and Monetary Affairs just yesterday. Joining us now is the chair of that committee, Irene Tinagli. Very good to have you with us on the programme then, Irene. Thanks for joining us. So we heard there from Christine Lagarde talking about inflation and growth and the like. How concerned are you about the inflation picture in the euro area? Are you comforted at all by numbers out of Spain today, which came in weaker than expected? What's your view on inflation?
Well, the problem with inflation in the euro area compared, for instance, with the inflation in the United States is that we have, on one hand, a peculiar kind of inflation, which is mostly driven by energy prices that both directly and indirectly affect the inflation rate. And this is something that unfortunately cannot be changed easily by just hiking the interest rate. So we need to have more comprehensive measures. And so this is one of the issues. And the other problem that we do have is and we discussed yesterday in the hearing, many different inflation rates inside the European Union. So you have countries, we have divergences. We have countries that have inflation rates as high as 22%. And countries that have actually much lower, like in the range of 6 or 7%. So depending on the energy mix, depending on the measures that have been taken by the national member states, because we know that the response in these months has been very, different from state to state. So we need to be very careful in trying to have responses that take into account this heterogeneity and does not increase the divergences, but tries to have a more convergent path. So it is very complicated, but we are, scrutinizing and looking and monitoring what is going on very closely.
So I hear you, Irene, that there are different rates amongst the Eurozone countries. Are you concerned then that the ECB may be hiking rates into a recession?
This was some members of the parliament yesterday indeed were concerned a little bit about that because we know that we are walking on a fine line because the economy is slowing down considerably. So many members of the parliament ask questions about these. How are we sure, how can we find a balance, by fighting inflation with the traditional tools of monetary policy, which is the interest rate, but how do we make sure that this does not accelerate or aggravate the potential recession, considering that already the forecasts for growth for 2023 are close to zero in the European Union. So we have to be very, very careful. And I hope this is also part of the strategy of the European Central Bank when President Lagarde says we want to make decisions based on data. I hope that this data includes not only inflation but also the stability and the economic conditions and situations of the European Union. So all these data have to be taken into consideration when some decisions about the interest rates are made. So that's why I think that the Governing Council is deciding step by step and not giving forward guidance in this uncertain scenario.
I want to take you to crypto right now because you've got new rules in place. MiCA, M-I-C-A, is the acronym for the new EU crypto rules. How would, for example, FTX have fared under a MiCA regime? Would the blow-up have been avoided?
Well, this is actually subject of debate, and we will discuss it exactly tomorrow because we are having a public hearing, so everybody will be able to follow that in the Econ Committee of the Parliament. It's a hearing on the collapse of FTX and just trying to understand what happened, because we are still trying to understand and discover what really happened, and if the regulation, if the tools that we have negotiated just a few months ago and that we are about to vote in the plenary would have been sufficient, because they are still not in place. So the MiCA regulation, it's still not functioning. So we have negotiated it, we have approved it in the Econ Committee, and but now we have to go the final steps, and it will be in place later on. Would that set of that toolkit be enough to prevent cases like the FTX? We will discuss that tomorrow, and we will try to better understand what went wrong, because we need to make sure that things like this that don't happen again in the future.
So if in those discussions, Irene, you find that they may not have been enough to prevent an episode like this, do you think the end result could be even tighter regulation going forward?
Frankly, I don't think we are going to reopen what had been negotiated and approved and voted in the past year. But what I think is that, when we talk about regulation, we always talk about ongoing process, especially when we are regulating emerging phenomena, new phenomena. We have to adopt a gradual approach, trying to regulate what we know about, avoiding the over-regulation or avoiding, things that may not work. So we adopt a step-by-step approach again. So we did this regulation. I think it's a good toolkit. We will evaluate this also at the test of the new cases that are coming up in these weeks and the upcoming months. And we can always improve on that regulation, as we normally do. So we normally do reviews or quick fixes. So regulations are not set in stone. We move forward when we believe that certain regulations need to be updated to address upcoming issues. So, but it will be, of course, not up to me, but up to the Parliament and up to the members of the Parliament and the political group to evaluate and decide how to proceed on the process of better regulating the crypto asset markets.
So clearly a lot of different players involved in these conversations, Irene, but do you personally view crypto as having some kind of more systemic threat to financial stability, given the episodes we have seen, being that FTX was not the first collapse wave we have seen this year?
Well, it's still maybe early to, right now we are not seeing that systematic effect, but also because it's a relatively new phenomena. But we also see that it is, on one hand, it's been growing exponentially, so potentially could become a phenomena that might have a systemic effect in cases of collapse of certain platforms or service providers, etc., like the ones we are seeing in these weeks. So I think we need to be really, really careful in monitoring what is going on and trying to put in place regulation that would prevent that to blow up out of proportion and to become a systemic threat. So for once, we would like to act before the systemic, because, you know, in the past, we had to regulate after. For instance, during the Great Financial Recession, we had to act and put regulations in place after the collapse and the recession. So we would like to prevent that. Of course, we would like to do that with all the information, with all the elements that we needed to have a proper regulation.
All right, so anticipating, not just reacting. Thank you so much for joining us, Irene Tinagli of the European Parliament's Committee on Economic and Monetary Affairs. We appreciate your time. And for more conversation on crypto regulation, tune in to Bloomberg Crypto today at 1 p.m. New York time, 6 p.m. in London. It's our weekly show with Matt and I that shows the people, the transactions, and technology shaping the world of decentralized finance. We'll be hearing from crypto investor Aaron Brown and crypto skeptic John Reed Stark this episode. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London. Let's take a look at what's ahead today. NATO foreign ministers have begun 2 days of meetings in Romania. We're also watching Germany for inflation data. That comes out at 7 a.m. Eastern our time. At 10 a.m. we'll get U.S. consumer confidence data for November, as well as BOE Governor Andrew Bailey speaking in the House of Lords. So that's it for Early Edition from me, Anna, and Kailey. Bloomberg Surveillance is ahead with Lisa, John, and Tom. I think they're all here. We'll hear from former New York President Bill Dudley, among others. This is Bloomberg.